Hello, hello, and welcome to another episode of the Awesome in Seattle podcast. This is Christian Nossum with the Awesome Nossum Group at Wilson Realty, and I am a local Seattle area real estate agent. And I am here joined with the one, the only, my former Seattle Real Estate Radio co-host on, what was the, I don't even remember.
KKOL, Business Radio.
Yes, that's right.
How could you forget? You said it a million
I don't remember
times.
the number.
1380?
1380 or something? AM radio. Woo!
Yeah.
That's how long we've been doing this.
We were right after Dave Ramsey on Saturday mornings. We had a great spot.
We did. But I'm here with Dan Keller of New American Funding. He is a mortgage loan officer, and we've been working together for over a decade at this point. Yeah. And I'm bringing you on today because there are some major changes that are happening to condos. And this will affect people that already own a condo, people that are thinking they want to buy a condo, and the associations, the condo associations. So if you fit into any of those buckets, you definitely want to understand these changes that are already in place.
Yeah, September, a month and a half ago.
Yeah. So I'll let you kind of explain the big picture overview. What exactly happened? Let's get right into this.
Well, let's go back to 2021. So we'll provide a little bit of context around today's talk. In 2021, there was a high rise, I believe, in Miami, Florida.
Yep, I remember this.
Okay, it hit the news. It was really ugly, but long story short, it was catastrophic.
Yep.
It collapsed. Okay. Right after that, Fannie Mae, obviously, they had to do the investigations and everything. And Fannie Mae determined that had they been a little bit more diligent on the approval process. So when someone buys a condo, you don't just, like a house, write an offer, get a pre-approval letter, write an offer, and close.
Yeah.
Right. So
with the condo, it's a little different.
It's a little different. Yeah. There's a homeowners association involved. And so I always tell my clients when we're going through the pre-approval process and they mention that they want to buy a condo, I always jokingly say, all right, so my job is to get you ready to go into business with someone, because you really, truly are going into a relationship or a partnership with the HOA. Okay. So the HOA owns all of the land. You own the unit on the land within the land.
You own like the drywall in, basically, or the paint in.
That's it. Your little unit.
Yeah,
so
you got a little space of air in there.
So with that, you have neighbors that also own units. You also have the HOA that owns all of the land, the building that has guidelines and rules and restrictions, covenants, all of that stuff. And so in our conversation around that, we always talk about the resale certificate. And I'll come back to this here in a few minutes. But if you went back to that event that happened in Miami, Florida, since then, Fannie Mae has really made it a big point to go in and tighten up some of the loose regulations. So what we've seen over the last few years, and this is so I've interviewed our head of underwriting at New American Funding. We're a top 10 mortgage company in America. I've interviewed our head of the condo department. So we have our own internal condo division as well. Wow. And both of them shared some crazy stories because during the last couple of years, they've been on boards and committees and even in DC as they've passed some of these new regulations, and they've heard the horror stories. Yeah. One of the horror stories was recently there was a condo project in California. You heard of the wildfires, right? Yep. Burned down. Okay. Their replacement coverage on, get this, about $170,000 complex. Sorry. $170 million complex.
Say, yeah. I was like, $170
million. The replacement coverage was $12,000.
What?
Sorry, I'm getting my zeros. $12 million. So $170 million replacement was $12 million.
What the heck?
Yeah. And so over the last few years, with inflation and everything else has gone up, so have insurance premiums.
Well, yeah.
Well, what happened was that particular project, and they've seen numerous cases like this, they weren't staying on top of their insurance coverages. So the first thing that we're going to talk about, the first thing with all of these new guidelines that's coming into motion is master policies.
Yep.
Okay.
So that's the policy that covers the entire complex, the entire association, the building itself, and everything that goes along with it.
Yeah. So in the past, and you know this, in the past, if you were to buy a condo and you had a client that was putting down 50, 60, 70%, a large down payment, you could get what's called a limited review, and you could kind of cut the corners. They wouldn't look into that. Consider that gone. It doesn't matter if you put 5% down now or 50% down. There are still certain processes that every loan applicant has to go through relative to the project and the approval process at the lender. So the big one is master insurance policy. The other thing that came out of this study since 2021 was we refer to them as special assessments, right? Those are documented things that from a reserve study that will need to take place or are taking place. Here's a new one. Any bids or work orders in the last 3 years have to be fully presented to the underwriting department, regardless of the down payment, regardless of limited or full review.
So I'm going to back up and explain this again. So tell me if I'm wrong, but what you're saying, what I'm hearing is if the association needs to put new windows in, and they're deciding to do that, and they're getting bids for that, and it's going to cost, you know, $10,000 per unit. So, you know, say there's 100 units, $10,000, $100,000. They're going to then have to, even if they never do the window project, they're like, you know what, we don't really want to do this. We're going to hold off for a year or two. They now have to present that bid to the underwriter, to the bank, whoever's giving the mortgage. For them to, even though they never did anything.
Correct.
Interesting.
Yeah. Now you must have done your research on this because the magic number, so there's 3 big things. Master policy that has to be reviewed. The other one, the last one of the 3 is any work orders that are current or pending that exceed $10,000 per unit, it's an automatic ineligibility for financing. Yeah.
No matter what.
For delivery to Fannie Mae. Yeah. So this is where I'm going to maybe go a little off script. This is why you and I have worked together for a dozen years. This is why I know you like working with local mortgage professionals
it's a huge deal
versus the big box lenders, you know, banks and credit unions. We do a pre-audit.
Okay.
And you know my team, my processing team. We're going to do a pre-audit before we submit to underwriting.
Okay.
And during that pre-audit, if we review everything and there are some work orders that exceed $10,000 per unit, we're not going to submit that to underwriting because we know it's going to be dead. Then now banks and credit unions and mortgage lenders like us have to report that to Fannie Mae. So Fannie Mae is relying on the banks to rebuild their approved condo list.
Got it.
Now we've just hosed the whole entire project. So what we'll do, we're going to pre-approve the project. We're going to go back to you, the agent, both the agent, the listing agent, the buyer's agent, and say, hey, listen, as is, this project is ineligible for financing.
For Fannie Mae
unless it's currently eligible for FHA, which it probably wouldn't be at that point. So you know this, we're coming out of a really hot housing market over the last 3 or 4 years. People let their FHA approvals just expire because
they don't last forever, just so you guys know.
We don't need
if you're
FHA,
an association, if you're HOA, you have to pay every single year or 4 years, I think it is.
Yeah, it's
something like that.
Years,
and you have to prove that you are, you know, able to get FHA financing. You have to, you know, have some check boxes and meet all the criteria. And then, hey, some buyer that comes in with an FHA loan, they can actually buy it. Most associations now, I would say, don't actually have it because they haven't needed to, like you were saying.
There was too many well-qualified buyers over the last 5 years. And so we don't need it. Well, kind of need it now. So it's really important. So I think that, you know, looking at these guidelines and understanding kind of how things are changing. Okay. If we went back to that example of how we pre-approve the project, not just, we're not talking about the person's financing. We're talking about the project. We can go back to you guys as agents and say, hey, we got to put our heads together, 1 for our clients, number 2 for the project, and let's try to write this. Let's try to fix this. If you can do X, Y, and Z, then I can submit it for Fannie Mae approval. But as is, if I submit it, you're not going to like me because the deal's going to go sideways, and the project
complex is going to be.
We've just blacklisted the project, the complex, and that's not good.
No. Do you even know how you get unblacklisted?
See, that's a question that I've asked our head of underwriting, because what happens right now is you have a list of ineligible Fannie Mae ineligible condos, and it's growing and it's big.
I'm sure every day it's growing by a ton of complexes.
And there's reasons for each one of them being on that list. I mean, you can go make it right, but most of the time it's not you're $5,000 off on something. You're substantially off on something. So that's what I'm saying. If we pre-approve these, and there's a workaround, then hey, then let's go do it. If not, then we're able to help you guys up front before an inspection's been done and appraisal's been ordered, which
for a lot of time and energy and money has been spent on it.
Yeah.
That's awesome that you're pre-approving not just the buyer, but the complex itself.
I'm going to start sending out a list, and we get it through Fannie Mae, and we get it internally at our bank, but they present it as an Excel spreadsheet. I'm going to start sending it out to, you know, my emails that I send out to real estate agents every other week. I'm going to start just sending it out just so you have it for your records. And then as well, obviously you're a real estate agent. You can reach out to me anytime and I can just print it off or look up a unit, or a project. But those are the three main things, you guys. So
that's kind of crazy. So let's recap and let's make this bullet points. So if you are a condo buyer or a seller or an association, what you need to know are the three big changes, and they are number one,
master policy. Okay. So important. Master insurance policy. And that's really easy to get your hands on.
Yeah. And it's got to be beefed up enough where it's covering
replacement coverages. Yeah. And we can get into that in further detail here in a minute. But the big thing is that there's enough, basically, that the policy can replace the project. It's carrying enough.
Number two,
we're talking about the items $10,000 north of $10,000 per unit. Okay,
of repairs that are needed or that bids were given for that for a special assessment, or even just work was going to be done, and that's how much it cost per unit out of their reserve budget that they already had.
Yeah, right? A good, I was talking to our head of underwriting too, not to go off topic here, but I think this is really important. If you look at the resale certificate and you look at the reserve study, a good condo association through the reserve study is going to show you 5 years from now or 15 years from now, this is what's going to have to take place. And so then you can just reverse engineer HOAs deposited, delinquent HOAs, you know, money, you know, looking at their P&L, stuff like that. So, I know great agents like you pay attention to stuff like that. A lot of real estate agents,
they have no clue how to even read those things.
No. Yeah. And it's kind of a bummer. So,
yeah. All right. And then number three,
the list, right?
The list.
Yeah.
The list of blacklisted complexes. Yep. I call them complexes. You probably call them projects.
Projects.
Yeah.
Condos.
So condo, project, condo, complex, whatever you want to call it.
Yep.
Interesting. Okay. So for current condo owners, what are the positives and negatives of these changes?
Well, we've said it a lot over the years. Knowledge is power. So if you own a condo right now, you have to look at anytime you own real estate, you have to look at it as an investment. Totally. You have an opportunity right now to protect your investment. So knowledge is power. I'd reach out to Christian. I would reach out to Christian and I. And what we'll do, I've thrown this out there to all the real estate agents that I work with. We will do a free audit. Yeah. I don't care if you're listing a condo, if you have a buyer that's interested. Just all I need is the condo project name and address, and ideally the HOA contact. Yeah, and we'll take care of everything else for you guys. Yep. And typically, if we can get in front of, see, here's what you have to understand too about these people that run these HOAs. Unless it's a big company that specializes in HOAs, it's a mom, regular Joe and Sally, right?
Yeah, this is not their full-time job. This is their, hey, I came home. There was an election for HOA president, and I was elected because no one else stepped up.
No one else. And I work a full-time job, and I live in that project.
No, totally.
Right?
They do, yeah.
Yeah, so that's important. I think that real estate agents and lenders and home buyers and sellers understand that, that this is to protect your investment, and no one else is going to really do this for you. Yeah. Until someone wants to buy or sell, and that at that point in time, it could be too late.
Yeah, and you don't want to have that be too late. Yeah.
Yeah. Okay. So I think there's a huge advantage for homeowners right now in condo projects to just do your due diligence. And if you don't know where to go or what to do, reach out to Christian and we can help you.
Yeah. We would love to tag team this and help you understand what the best next steps will be, because this is all new. This is only, at this point, 2 months old, because we're in November at this point, 2023.
Yeah.
This is all new. So we're working through trying to figure out the best ways, the workarounds, the ways to still keep the project safe, but also to financially allow appreciation to occur and home values to increase or at least not plummet.
Yeah. Well, and the great thing too about this audit, if you are a homeowner or the head of an HOA, this is great information to have a professional. We review these numerous times a month, right? And hundreds of times in my career. We have to do this in order to fund your condo, right?
Yep.
How great would it be to have someone audit this going, hey, your condo association is looking great. You want to pay attention to these 2 or 3 things within the next 5 years. How cool would it be to have that info or that intel for free?
Yeah.
So, and a lot of that comes from the reserve study.
Yeah, exactly. Yeah. And that's another thing that by law you have to have, which 10 years ago, you didn't have to have those.
No. I mean, Christian, over the last 5 or 10 years, we literally would help people that are running these HOAs do their budget. We would get the docs and we'd be like, we need a budget.
Yeah.
We don't have a budget. Dan Dietrich would literally help them make a budget.
Yeah.
So things are going to change with condos. So people are going to have to actually get their stuff together.
Rightfully so.
We can be a resource.
They should.
Yeah.
They should change. They need to know what's going on with their complex, with their project, with the association.
Yeah.
So that it makes financial sense for everyone. No building is getting left behind and, you know, having something catastrophic happen because no one's paying attention or they're turning a blind eye to it and they don't want to deal with it.
Yeah.
Like, we don't want that to happen.
No. Well, and my bigger message is for first-time home buyers. This is your first big investment.
Yeah.
A lot of the times condos are your way into the housing market.
Totally.
And one wrong decision with your first home purchase could put you years behind versus putting you ahead of the game. And again, that's why you want to work with professionals like you guys, you and your team. But it's so important too for home buyers to make sure that you understand these changes.
Yeah. So let's talk about buyers. How is this going to affect buyers moving forward? What are the big changes that they need to now look for? What do they need to know? What do they need to understand when they're evaluating one project versus another? Because that's a big part of this. This is what buyers do. They will look at 2 or 3 different units, condo units in 2 or 3 different condo projects or complexes, and they're going to weigh the pros and cons. It's not just the amenities. It's not just the location. Now they're adding on this other thing, which is, can I even get a loan on this place? Because if I can't, it's immediately axed. I'm not shopping in that building anymore.
Yeah. I think all of these rule changes and these guideline changes are there to protect the buyer. Yeah. And so I think the best news for anyone and everyone here is the future home buyer.
Good.
So it's going to be tougher to buy a condo, but good for you because you're not
necessarily a bad thing.
It's not a bad thing. Yeah, you're not buying a lemon, and you're decreasing the chances of you buying something that's going to have issues. So I think that's the biggest thing. If anything, first-time homebuyers, you don't have a whole lot to worry about other than, hey, you might like a particular condo and then come to find out that it's not a good investment. Yeah.
So an alternative, if it is blacklisted from Fannie Mae, then the next alternative is to get an FHA loan. If it's approved, is that what I'm hearing?
Yeah, but I would go as far to say that if it doesn't meet Fannie Mae's criteria, you probably want to stay away from it. You know, and then again, maybe have someone like us do the audit and see how far off or how poor of a condition the HOA is in. It may not be in a bad condition. I do believe there's some opportunities here too. I believe there's some opportunities to buy a condo for pennies on the dollar that might be on that blacklist, and then you as an investor partner up with a lender and go, okay, how can we, before you buy it, can we turn this thing around? Can we fix this? And if so, hey, you might be able to get a condo for pennies on the dollar, rent it out, live there, rent it out until you guys can fix the HOA, and then boom, value goes up, and then sell it. So,
well, that was leading to my next question: is how are these new rules going to affect condo home values?
Yeah, so that's a great question. All right, so let's say you're blacklisted and you can't get conventional financing or FHA. You can still get financing. It's non-warrantable condo financing. We offer it. It's a step above hard money. So you're not great terms. You're north of 10.5% in today's market.
Interest rate is ugly.
Really ugly rate, and you got to put down 30% or more.
Wow.
And the lender will most likely, the minimum is 30% down.
Wow. But it could be even higher.
More. It could be more.
Now, are those rules and guidelines going to change per complex? Or is it kind of like a flat thing? Or how do you know how that's going to work?
It's more of a flat. It's non-warrantable. If it's non-warrantable in nature, it's just going to be more of a flat thing. The only way it would change is if you got it warrantable, if you fixed it. So, so cash and high interest rate, large down payment financing is really it. Or you know, I know you do this as an investor, get some seller financing.
Yep.
But again, do your due diligence. There has to be an out. There has to be an out that, hey, I think this project, maybe they don't think we can fix it, but I think we can turn this thing around in 3 years or 5 years. Put a tenant in there. Tenants don't care. They don't pay attention to that stuff.
No, it doesn't affect them at all. Yeah.
So those are some of the opportunities I've been talking about, but more so for first-time home buyers. What it does is it tightens up your options for buying a condo.
Got it. So for current condo homeowners associations, what can they do to prevent getting in this pickle, this blacklisted Fannie Mae list where you can't get financing anymore?
Yeah, one, stay on top of your reserve study. I mean, that is your playbook for running a great HOA.
Now, let's say that they have potentially $20,000 worth of work per unit coming up. They haven't gotten bids yet, but they know that work in the next 2 years is going to happen. Could they do $9,999 assessments, numerous of them, leading up to you know, however many they need to do in order to make that.
I'd get the bids.
That work done.
I mean, I do the research right now. Again, you go out and you get the bids and the work orders. You have to disclose that, and so then it's subject to underwriting, you know, approval. But I think start chipping away at that so you're not going to get hit, because these guidelines are not going to get reversed. No, they're not going to change. So if you know it's going to come down the pike 3 years from now or 5 years from now, again, follow that reserve study, follow the recommendations of raising your dues. So that's number one. Pay attention to that. Number two, I would do a full audit of your master policy and make sure. So I've got some notes here. You have to have full replacement costs of the condo project in your policy. Number two, the deductibles cannot exceed 5% of the face value of the property. So what they were seeing when they were auditing over the last couple of years is they were seeing, to keep the premiums down, the deductibles,
massive deductibles.
You can't do that anymore. And so can't exceed 5% of the face value of the property.
Interesting.
And you need full replacement costs of the project in the policy,
which I thought makes sense. That's what you would want.
You would.
One would think.
We weren't seeing that. That's the problem.
They're trying to keep dues down, and with inflation, the dues are going to keep rising.
And insurance premiums have skyrocketed across the country. Wildfires on the West Coast, the winds, tornadoes, hurricanes, everything on the East Coast and the South. So I don't blame them. But I would pay attention to that, and then the reserve study. Those are the two big things I'd look at if you're a HOA president or on the board.
Got it.
Or homeowner.
If associations want to come up with a game plan of how to make themselves presentable and financeable in the future, should they reach out to you?
I would
assistance
100% right now. I would, even if you're not even interested, even if you don't even think anyone in your project's selling, or just condos sell all the time. So it's just a matter of time before someone needs to sell.
Exactly.
Do it right now. Just all you have to do, my contact information will be in the notes of this podcast. And I'll just give you my cell number right now, 425-350-7136. Just call me or text me and just say, hey, I'm the HOA president at ABC Condominium. We just heard your podcast. Eek, what do I do? We'll do a free audit. All I need is the head of the HOA, the contact of the HOA, the address, and the condo name, and we'll do everything else for you.
That's awesome. I don't know why you wouldn't do that if you live in a condo association, because you don't want to get in the position of being blacklisted. So don't get there.
Well, so Christian, what's the catch? Dan, why would you do this for free? Why would you spend all your time doing this?
That's a good question.
Well, we're here in Kirkland and Seattle, and we finance a ton of condos. I want to see more condos on our internal and Fannie Mae approval list. Because if they are approved, boom, we cruise right through underwriting. Okay.
You can actually help buyers buy that, meaning sellers are going to be able to sell their condo. We make money when people buy, and I make money when they sell as well. If they can't sell and no one can buy it, then that's decreasing how many loans you can make.
That's it.
So that's why you're doing this. That's why you're willing to spend your time, your effort, your team's time and effort into helping them continue.
And as homeowners, your values go down if they're unfinanceable, right?
We don't want that.
No. Or if you're just getting to this as it's transactional, now it's going to cause delays. Real estate agents are going to be less likely to want to sell those condos and those projects.
And I'll tell you this, most agents don't know this. This is new. I mean, 2 months old at this point, month and a half old. even the ones that have been told that there are changes, they still don't understand what that means. Like most agents are not up to date on what's going on the financing side because it's a completely different, although it's very intertwined, it's a different world. And I don't pay attention to every single lending change out there. It's not my realm of expertise. Well, but when stuff like this comes out, I know that I have to be informed.
I mean, if you're sitting down and meeting a new client and they're going to buy a condo and you can't explain what's going on with the new changes, you're just not doing your job. Exactly. And I know you and your team do a great job right when it happened. I mean, we were talking and Joanna even came to my seminar that I put on about this. But I think this is just really, really important info. Real estate agents and sellers, 99% of the time, are reactionary. Yes. And this is a time where you just do not want to be reactionary.
You need to be proactive. Yeah. You need to be proactive if you have a condo.
Yep.
Not much more I can say about that. Like, you might as well. There's no costs. And you could save yourself a ton of money and earn yourself a ton of money when it goes time to sell somebody in your complex. So
I'll even throw this out there too as we wrap up today. And I know you and I would do this together, but I would volunteer to come out to your next meeting. Yeah. If you are an HOA president or a homeowner and you want someone to come out and just explain these like in 10 minutes or less, we can bring some goodies and some beverages, and we'll just, Q&A time.
Exactly. Answer the questions for the owners that currently are there. Explain what's happening, how this affects them, why this is a big deal, and again, not charge anything to assist you guys in getting your stuff set up correctly before not good things happen.
Before it's too late.
Yes. Yeah. I wanted to say some bad words.
The oh crap moments.
Yes. Yeah. Something hits the fan.
Yeah.
Yeah. All right. Well, Dan, thank you so much. Yeah. We did slightly mention interest rates, so I want you to stay in compliance. Tell me your MLO number.
Yeah, I am a licensed Washington State mortgage loan officer. My MLO number is 119359.
Niner.
115359.
All right. I used to always say Niner at the end. That's why I was laughing. I was waiting for you to say it. All right. So Dan, thank you so much. Really appreciate you coming on. I feel like this was a ton of really helpful info. I hope the listeners got a ton out of this as well. If you are, again, a homeowner in a condo or a condo association board member, feel free to reach out. We would love to chat with you. Again, no cost. We're not getting anything out of this other than allowing you guys to be set up the right way to protect your investment. So reach out. My contact info is right here on the screen. I'll also say my cell phone number, 206-949-3048. We'd love to help you out. And just make sure that your assets are protected. That's a big, big deal in this world right now. So that's it for this week's episode of the Awesome in Seattle podcast. We'll see you next time.